Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam. The markets today have opened up a little bit on the lower end for the time being, but par for the course after the kind of rally that we have seen in the Nifty Bank. That's the one that's seen a 1,000-point cut in the last two trading sessions. So let's see how it goes. Mangalam?
Absolutely. Let's see how it goes. Slightly iffy in today's trading session. The week extremely important and the month even more so. But let's talk about individual stocks and individual corporates as well. Jairam Sampath, the director of Kaynes Tech, he's also the CFO there, joins in to discuss their foray into semiconductors and the impact of the electronics import policy. They've also announced the acquisition of a smart meter installation and operations company, Isran Menco, for about 43 odd crore rupees. Thanks a lot for joining in. Always a pleasure speaking with you. So let's go one step at a time on the proposal of Kaynes Semicon Private Limited, where you are likely to invest about 3,300 crores in this semiconductor plant. Just wanted to know, one, what would be the asset turnover? By when does it reach its full revenue potential? And what would be the benefits in terms of regulations coming in from, the cabinet's approval that have come by?
Sure. So thank you for having me on the show. The Kaynes Semicon approval in some sense represents a landmark decision by the government, because we are not one of those big business houses or something. We've kind of been working very hard at developing electronics manufacturing in India. And as part of our strategy to become an integrated manufacturing player, we had embarked on this journey. And I'm happy to tell you this total project's capex is about 3,300 crores. And on the plant and machinery capex, the central government provides us, as per their ISM policy, about 50% capital subsidy. And then state government also provides us about between 20 and 25% capital subsidy. So this basically helps us to overcome the initial, let's say, a stage of manufacturing implementation, and we are forced to implement some legacy technology which may not be in the initial stages very profitable. So what it does to us is essentially, in terms of timeline you asked, so we are looking at next, let's say, FY26 as the year in which we'll start commercial production. We'll, of course, early in FY26, we'll start our proof of concept line and working with customers and getting it approved and so on and so forth. This is also the time required to work with all our collaborators and getting our manpower trained, recruited, etc., etc. And in this business, typically, if you go by the experience of the existing players globally, anywhere between 1 to 1.5 times, let's say, gross assets turns are possible. Now, it depends it depends very much on what kind of work we do. So if you continue to do low value added work, then it will be closer to 1. If you do high value added work, 1.5. We've attempted to kind of tune our capex more towards the advanced packaging areas, which is also the emerging area. And we wish to work in tune with the latest generation of packaging technologies. Of course, the capex permitting, of course. And so almost 3/4 of our capex we are aiming towards the advanced packaging area, where we work with, let's say, cutting-edge technologies and also in the advanced packaging.
All right. Hi, Mr. Sampath. Good morning and good to see you, Ben. So just to revise, the total investment that you will be making is around 800 crores. The revenue potential could be roughly around 4,000 crores odd. And as you said earlier as well, it will be margin accretive whenever this gets up and going. Yeah, and most of the capex will go towards the advanced side of things. Are we getting that correct with regard to this facility itself?
Absolutely.
Got it. All right. Now let's focus on the small inorganic growth that you've done, Mr. Sampath. What exactly, does the company do? If you could tell us in the smart meter value chain, will it be in the PCB assembly? Will it be in the grid? Will it be in the, display designing or in the software development? So could you tell us where this particular acquired company comes in the value chain?
Absolutely. So we are a company which manufactures devices, and we are into some portion of our business into solutions and so on. This particular company is in the area of providing total solutions for smart meter implementation. Okay. And they work with several other agencies to make sure that smart meter implementation is enabled. And they have proprietary technology. They have also technology which help in software management and so on. So this particular company actually is a device company with an added strength in software, which is like the head-end systems and meter data management systems. So why is it? How is it critical to us? because it ensures that we secure our orders in the field. This company has been working with many AMISPs and all the other agencies to secure orders out of the new program that government has brought for implementation of smart meters.
Right.
So this essentially means that we secure our business in this area and also take advantage of the solutions capability here.
Got it. Mr. Sampath, quick couple of questions. Last year, I think this acquired unit did around 65 crores of revenues. So how do you see the revenue scaling up, this acquired unit? And what is the margin profile?
Yeah. So, of course, I'm not at liberty to discuss too many things, which is not in public domain, but suffice it to say that they have secured an order of close to about 3.5 million already. And maybe out of the remaining portion, which is the AMISPs deal with, maybe about 20% or something we are expecting as a share of our business. So it's a fairly lucrative business. In terms of margins, all I can say is that it will definitely be margin accretive to our current situation. And being a solutions portfolio, there's a possibility of future revenues too by through AMCs of software and so on without too much of cost being incurred. Plus also supply this software to other device manufacturers.
All right, we understand that you are not at liberty to give us a lot of numbers, but we will push you once again, perhaps when you come after your second quarter results. Thanks a lot, Mr. Sampath, for joining in and giving us the outlook on this acquisition, your semiconductor foray. We'll talk about the order book, order inflows, as well as margins for the entire company when we are, speaking to you post your second quarter numbers. We elicit a promise from you to join us when that happens. Take a short break now, come back, get you more on the markets. In fact, we'll get chatting with Manan Shah, who's the Managing Director of Man Infra. Welcome back. Let's get chatting with the management of Man Infra. We have with us the management of Man Infra joining in largely because of their Atmosphere O2 project receiving the OC or occupancy certificate as well. Manan Shah, who's the managing director, joins in. Manan, thank you for joining in. You've received the OC for Wing F of the Atmosphere O2 project. So just wanted to know how much of it is sold, how many more wings for which you are expecting the OC to come, by when? And as a result of all of this, what's the total revenue potential that you've realized so far and what's in store for this year?
Good morning. So Atmosphere O2 has basically tower D, E, F, and G. D and E tower, the OC is already received for some time back. F tower is the one which we received the OC recently. And G tower is under construction, which we are anticipating to complete by 2026 mid. Now, in terms of potential, we've already sold 90% throughout the DEF towers, and we're receiving continuous momentum. In fact, October, November, December, Jan seems to be the festive months. So we are seeing the sales potential even going further.
Okay, all right. Hi, Manan. Good morning and good to see you in. Nigel on this side. Manan, what is the total sales potential? 90% is sold out, you told us. You're seeing good amount of, momentum, but the number we missed.
We are looking at approximately anywhere between 3,500 to 3,700 crores.
That's overall or for this project itself?
Overall for entire O2, which includes the G tower as well.
And by when does that all start to reflect in your books? Because you've sold 90% of DEF, G starts, the construction completes in the middle of next year. So by when does all of this revenue start to show in your books? And what's your collection run rate likely to be?
So see, basically it's an associate company, so the revenue will not reflect into our books into the top line. The profitability is already started to get recognized from last year itself, and it will continue to go on. Talking regarding G will get completed in 2026. So the sales for that has also crossed 50% already, and we are just 30% at construction of the total tower. So we don't see any worry regarding the sales for that tower as well.
Okay, just explain that to us. Why will all the revenue not get accrued into the books of Man Infra?
So because it's an associate company, we own 33% equity. And being an associate company and not a subsidy, the reflection in the turnover will not come. straight the
So
profit.
your share of revenue in that, then in that case would be just around 1,000 crores, right? 1,200 crores, because it's 33% of potential 35 to 3,700 crores revenue.
I mean, revenue, again, like I said, it will not reflect into the books. We should see the profitability of the project. So yes, but 33% of that would be us.
So what is the profitability of the project? Sales we have. What is the rough profitability that we're looking at from this particular project?
We are anticipating that to be anywhere between 300 to 350 crores.
And so you would be able to realize close to around 100, 120 crores, right?
That's right.
Got it. All right. You know, collections for last year were, I think, around 1,200 crores for the company. And on a quarterly run rate, now you're doing in that vicinity of around 280, 290 crores. Should we expect collections to continue in this vicinity on a quarterly basis?
See, more than collection, what happens is the construction stage of the project is more important. So last year, when you saw a lot of projects were getting completed and we were acquiring, this year, the majority of the projects have already been completed and now the newer constructions have begun. So collections, more than that, I would say you should see the pre-sales number, where last year we were at, I think, around 750 crores odd for the entire year. This year, in fact, the first quarter, we've sold more than 700 crores of pre-sales number.
So what is this number likely to be for the full year? That's point number one. Give us that number. And secondly, also give us the number for the US business. How much do you expect coming in from the US by when?
So for this year, basically, we're looking at an anticipated number of nearly 4,500 crore of launches. So that's nearly 1 million square feet is what the targeted launch is. And out of that, we've always seen a potential of around 50% getting sold in the first year. So I think you can say the pre-sales would come down to around 2,500 crore comfortably.
Okay, all right. What about the EPC project? What will we end in terms of an order book for this year?
So EPC, basically, we are looking at the port project is the major contributor, where we've still got another year and a half worth of works left. So around 750 crore is the approximate order book. But if you see the overall consolidation, we do our in-house construction as well. So the potential that's upcoming for the rest of the projects, that will also start coming in, though it will not again reflect in the top line, but it should reflect in the bottom line.
Quickly, the US business, you said how much it will be going forward. You had a target of investing about 100 crores here.
That's right. The money has already been transferred. We've got liquidity over there. We are seeing some good potential acquisitions happening in the next couple of months. I think by February or March, we should be able to launch our first branded residences project as well. That is moving on at a steady pace. We've almost received the approvals for the same also. So I think the realization and the profitability you'll start seeing from the US venture, I think a year and a half from now.
Okay, Manan, appreciate you joining in and giving us all those details. Your body language says that you're bracing for good times ahead. We'll track you on all these numbers and we look forward to having you back on the channel, maybe post your quarterly numbers. Well, on that note, though, I think we can slip into a short break, come back. We'll continue to focus on markets as well as on stock-specific action.
Welcome back. You're watching us here on Chartbusters. As you can see, the Nifty is at the low point of trade. 25,940 is where we are, led lower by Reliance. We are seeing some bit of outperformance coming in from the mid-cap index in the sense that it's not fallen as much as the frontline indices, but weakness persists for the Nifty Bank. How the second half of trade pans out, we'll leave it to the team of Trading Guard, which comes up next. But don't go anywhere, because along with Trading Guard at 11 today, we have the big voice of Marx Mobius coming in as well. So stay tuned for that.